What is the Enterprise Investment Scheme? The Enterprise Investment Scheme, known as EIS, bridges interested investors and young companies in need of finance to grow. The scheme has promoted over £15 billion worth of private capital into more than 26,000 unquoted British companies. Investing into early-stage businesses is risky. 9 out of 10 startups fail, and these companies have little to no liquidity. EIS lowers these associated risks by offering a number of incentives. Income tax relief of 30% of your investment, loss relief should the company you've invested in fail, inheritance tax exemption on shares held for a minimum of 2 years, and exemption from capital gains tax. Investment scenarios. For the following examples, we will imagine you are paying a tax rate of 45% and have invested £10,000. Scenario 1. The company fails. You receive £3,000 of income tax relief. You receive £3,150 of loss relief. The remaining £7,000 invested multiplied by your tax rate. Your total loss is £3,850. Scenario 2. The company breaks even. You receive £3,000 of income tax relief. You can sell your shares for £10,000 at no loss, as shares sold are exempt from capital gains tax. Your total gain is £3,000. Scenario 3. The company doubles in value. You receive the £3,000 income tax relief. You can sell your shares for £20,000 and will be exempt from capital gains tax on profit. You walk away with a cool £13,000 gain. While the scheme allows for a much greater level of investment than many vehicles, there are some restrictions. There is a maximum investment limit of £1 million per year, now being increased to £2 million if £1 million of the investment at least is placed into knowledge-intensive companies. Investors must hold their shares for at least 3 years. Whilst there are a number of industries, such as banking, insurance and farming, that are denied access to EIS, here's a taster of what an EIS-eligible company would look like. Companies must have gross assets of less than £15 million, be unquoted or on AIM or the ISDX growth market, and have fewer than 250 full-time equivalent employees. At the time of the share issue, and for 3 years after the share issue, the company must conduct a qualifying trade, be independent, so not under the control of any other company, and have a permanent establishment in the UK. For more information about the Enterprise Investment Scheme, visit our site, SyndicateRoom.com.